All right, hello everyone. How are you today? It's Kei. So this is the 6th of April 2022 on Wednesday. So I wish you're having a great day today. So this is before FOMC. So we will check charts as usual. I will screen some pairs and see what's happening, including gold, and also I can watch some other charts as per requests. But yeah, let's check what's happening right now. So let me switch the screen and start the live stream right away. All right, so as a quick disclaimer, as usual, basically what I talk about is all for educational purposes only. So when you take trades, please do at your own risk. Please do risk management when you every time trade. And also, since this is live, if you can please follow the rules and guidelines, that would be great. Because after all, we're all here to learn. And also, there are so many scammers out there using my name and creating some fake accounts. So please be careful. I have no Telegram, no Instagram, no Facebook, and I never send direct messages to anyone by SNS. So please be careful. All right, so once again, thank you for joining. Great to see you. I will first say hi to everyone until I see more people joining here, because usually right after live stream starts, the number of participants are a bit small. So I want to, before jumping into some topics, I want to talk, say hi, and yeah, just get ready to start. So for myself, I was a bit busy today. Actually, I had some couple meetings. I took a nap, and I needed to some test calls, and I was a bit busy. But yeah, I hope you're having a great day. For myself, I don't have any positions right now. No positions because I didn't capture any good opportunities. But yeah, are you trading right now? Are you in the positions? Okay, so let me say hi to everyone. Alex, thank you for joining. Alex FX and Hide, thank you for joining as well. Yeah, I won't be surprised by the Ramadan breakfasting. Yeah, yesterday there was a big noise, and today also I think there's a big sound from the cannon. And yeah, I won't be surprised. Okay, Carbon, Fibonacci, thank you for joining. Arnold and Mahardika, good to see you. Thank you for joining. And Jorg and Benedict, good to see you too. William, Arkady, and James, Oscar, David, Asif, John Hera, and yeah, Marco, Henry, Hagao, Payman, and yeah, Mahadeo, thank you for joining as well. Kevin, good to see you too. Thank you for joining. Yeah, so yeah, looks like markets are a bit flat, ranging today, and getting ready for the FOMC. Usually before the big news, the market tends to be quiet for Forex pairs. So, but we can still take charts. We can still create some scenarios what may happen to the near future tomorrow. So yeah, let's check charts now. So let me switch to trading view, and I will screen some pairs. So let me take out all these flags because the situation might be different. So these are my previous screening. So every time I open charts, I start from scratch. Okay. So Euro USD. Oh, this yellow line is actually the monthly support, monthly trend line. So let me quickly mention that monthly Euro USD is showing P wave. P wave is an Ichimoku way to say symmetrical triangle range. So lows higher and highs lower. So this is P wave. And in the P wave, currently Kijun Sen is taking the mid price. So the market just going up and down through the Kijun Sen. So now the market is on the support of the P wave. It may go up and retrace all the way back to Kijun Sen. Is the pattern in the past. But if the market breaks the P wave bearish after FOMC, then it may continuously be down. So yeah, you have to also watch this P wave on a monthly basis. Always mention also the bigger picture and break it down to the lower time frames. So monthly is the P wave, and breaking down to the daily time frame, daily shows it's down. Ichimoku is not here yet. Right, Ali, Mark, and Flets, thank you for joining. Everybody, great to see you. So yeah, so this is a daily time frame, and Kumo is bearish. After Kumo twist, it was very thin, like here. Whenever you see thin Kumo, this is showing the overheating market. So soon the market may reverse, and actually it did. It reversed backwards. So Kumo was thin before, but now it's getting thicker and longer. We can see also Senko span A is pointing down. So this is showing a nice downtrend in the long term. Kumo shows long term. I think there are many new participants, new members today. So let me just do a quick recap of these each line of Ichimoku. So Senko span B is showing the long-term market momentum. I just put B and L, long-term market momentum, and Kijun Sen is green one in my chart other setting. This is Kijun Sen. Kijun Sen shows the mid-term, and the blue one is called the Tenkan Sen. Tenkan Sen shows the short term. So Ichimoku really helps us to see markets in three different terms: long term, and mid term, and short term. So Kumo is showing the long term. So Senko span A is also the part of the Kumo, and when you see Senko span A down, this is also showing a downtrend in the long term. Technically, Senko span B is flat, so technically in the long term it's a bit flat, but there is a potential downtrend in the long run. That's basically what this Senko span A is. And then Kijun Sen is pointing down too. So Kijun Sen is showing midterm, so midterm is also bearish. And Tenkan Sen is also bearish. Tenkan Sen shows short term, it's also bearish. So from long term to short term, it's bearish. And that's why I say that this is downtrend. And also Kijun Sen is downtrending too. So this is bearish. But here is one thing. One thing is that there was a Tenkan Sen, Kijun Sen gold cross. And in Ichimoku, every definition in terms of range and trends are very strict. And in this particular case, this is technically not a downtrend. And that is because there was a, once again, gold cross of Tenkan Sen, Kijun Sen. And when you see gold cross, that means this is the end of downtrend in a short to mid term. So we have to wait until Tenkan Sen overlaps with the Kijun Sen or dead cross of the Kijun Sen again to confirm downtrend. Otherwise, in this condition, these angles of a Tenkan Kijun Sen and also Senko span B are going to be fake, and the market may reverse back to Kumo. Especially there's a monthly trend line very close, so it may reverse, is my expectation. But yeah, but we will see what may happen after the FOMC. So that's the Euro USD in the daily time frame. And also Chikou span is also showing the midterm. Chikou span is technically the midterm. And this is showing bearish because simply Chikou span below candles. And that's bearish. So right now, this is not a downtrend. It's a fake downtrend. So I would stay away from this one. I hope that makes sense. This is the basics of Ichimoku here. Right? Oh, I see many more people coming in here. Thank you for joining. Ivan, TikTok, Daryl, and David, Muhammad, and Fatar, and Charlie. Good to see you. Thank you for joining. Okay, so for now, I would stay away from this one, Euro USD. So I was actually watching two pairs today, just earlier, which were USD JPY and Pound JPY. So let me talk about these two pairs. So here is USD JPY. And the reason why I was watching was this was uptrend. It was uptrending in a daily, but now it's flat Kumo, flat Kijun Sen. In the forward chart, it just broke the Kumo bullish. So you may think that this is bullish now because the market is above Tenkan Sen, Kijun Sen, and Kumo is going up. Chikou span also broke in above candles. So you may think that this is bullish, but actually not. This is technically not a bullish. And the reason is because Kumo is up, but this Kumo is actually the bearish Kumo. This wasn't the bullish Kumo. In my color setting, bullish Kumo is a dark gray, and bearish Kumo is a light gray. So this is still light gray Kumo, so I will have to wait for the Kumo twist. Senko span A, gold crosses Senko span B to prepare to buy. Otherwise, it may be resisted and go down this way. So I was watching and looking for the buying edge just earlier because in a daily time frame it was bullish, but now it's flat. So for now, I'm staying away. And since there will be FOMC, I will have to stay away from now. Yeah, so that's one of the pairs I was watching. And also 1 hour chart. Yeah, 1 hour chart technically was also bullish. I was seeing the Kijun Sen angle bullish. I was looking for the buy chance somewhere around here. But yeah, I couldn't capture the confirmations to buy. So simply I'm staying away. So yeah, so that's USD JPY, but it's about to break. Looks like this is still ascending P wave. P wave is the lows higher and highs at the same price levels. This is ascending P wave. So now this is a bit becoming like the P wave, but overall it still looks like ascending P wave. And ascending P wave is my favorite candlestick pattern because it clearly tells us that there is more buyers and sellers in the market. So I'm still expecting the market breaks the resistance and goes bullish. So that's my analysis, my scenario. But I don't buy because currently Kijun Sen angle is flat and Kumo Senko span B flat, A flat. So it might reverse. It might bounce and goes up, and then I will look for the buy chance. But not yet, technically. Not a good timing to buy yet. This is just ranging, right? So that's USD JPY. And yeah, and then let me check the Pound JPY also. Because I was also watching this one to look for a trading edge a couple of hours ago. daily chart is technically bullish in terms of Ichimoku because the price is on the Tenkan-sen above Kijun-sen, Kumo is bullish, and Chikou span above candles. So momentum-wise, this is bullish, but direction is flat. Kijun-sen flat, Kumo angles are flat, so direction-wise, it's flat. I was actually watching the 1 hour. Let me see if it's still bullish. Oh, looks like it's still bullish in 1 hour. So you can see that the Kumo has been nicely bullish. And Kijun-sen is also pointing bullish. And Chikou span above candles too. And this is ascending flag. So this is bullish overall. So I was looking for the buy, but I wasn't able to confirm the entry edge, so I just stayed away. But now still looks like it's going up. So in this case, we can follow 1 hour direction. Oh, and this is also one thing I just want to mention is that the use of multiple time frames and which time frame to follow exactly. Because I pick which pair to follow, which pair to trade, and also which time frame to follow. So, for example, let me come back to the daily chart, or even weekly chart, let's say. On the weekly chart, what you can see is that Kumo angles are flat and Kijun-sen, Tenkan-sen are flat. I'm talking about these angles of Senko span B, Senko span A, and Kijun-sen, Tenkan-sen too are flat. When I see these angles flat, then there is a potential market reverse back to Tenkan-sen or Kijun-sen. So I stay away because this is still technically bullish. So, but this is like 50-50 chance of bullish or bearish. And simply that's why I stay away. Even if the market goes up continuously, it may go slowly and slowly goes up. This is where I don't see the trend direction, specifically on the weekly time frame. And in this case, I don't take the weekly time frame to follow because simply there is no trend on the weekly time frame. So let me go down to the daily. When you see the daily time frame, looks the same as weekly because the angles are flat. Senko span B flat, Senko span A is flat, and Kijun-sen is also flat. So the market may retrace. So this is where I say daily time frame has no trends. This is range in terms of Ichimoku. So since there's no trends, there's nothing to follow. So I don't take the daily time frame to follow. And then let me go down to the 4-hour chart. Okay, so here is 4-hour time frame. And what you see here is that the okay, so Senko span A is bullish, Senko span B has been flat, right? It's exactly flat, and Kijun-sen is now bullish, Tenkan-sen is also bullish. So, do I follow the uptrend in this case? The answer is no, because if you look at the Kumo, this is bearish Kumo. This is not a bullish Kumo, and when it's not a bullish Kumo, then the market may reverse back to Kumo or Senko span B. So this is still 50-50 chance whether the market goes up or down, and I don't want to take 50-50 chance because it will be gambling. So and that's why I don't take this time frame to follow. Yeah. And then I break it down to 1 hour. And finally in 1 hour, I see uptrend. Angle is up, Senko span A is up, Kumo is bullish, it's a dark gray Kumo, it's bullish. Senko span A is up. Kijun Sen is also up. And Tenkan Sen flat, but that's okay because this is only showing the short term. And Chikou span above candles. So finally, I can see some uptrend in terms of Ichimoku definition in 1 hour time frame. And this is where I take 1 hour to follow. In this time frame I take in this particular case and break it further down to a lower time frame 5-minute chart to capture exactly where to buy and follow the 1 hour chart direction. And what I mean by follow 1 hour means as long as Senko span A and Kijun Sen keeps pointing up, I keep trading the profit along the way. But once Kijun Sen becomes flat and Senko span A and Senko span B also becomes flat, as market goes flat like this, this is where I look for an exit timing. This is what I mean by the market becomes range or flat. Because when you see Kumo flat, Kijun Sen flat, or even Chikou span touch, that means there are buyers and sellers 50-50 in ratio. So once again, I don't want to trade 50-50 chance. So that's when I look for an exit time. So this is actually my mindset of which time frame to follow. So I don't follow whatever time frames. I specifically follow which time frame to take. And also I do this on all these currencies on the right. So every day I screen charts, I say I check daily or 4. And that's what I mean by, which time frame I'm following. Either daily or 4. I prefer to follow in the Forex because it moves up and down every week. Every week, there are some pairs up and down with this strategy. So we can always find some opportunities every week by using this methodology. So since this is bullish in 1 hour chart, we can follow 1 hour direction. So I will break it down to the lower time frame, which is the 5-minute. And in M5, I don't use Ichimoku. I used to use Ichimoku. Like last year or 2 years back, I was using Ichimoku also to confirm the trading edge, but not anymore. Because Ichimoku I found a bit too lagging. And if I take Ichimoku confirmations in the 5-minute chart and not taking Ichimoku confirmations in the 5, I compare the two performance, and when I don't take, my performance was better. So simply afterwards, I just delete Ichimoku from my confirmation tools. So, but I used to take this Chikou span break or Kumo breakout for the trading edge, but not anymore. Not anymore. But like this, I minor change my strategies like entry confirmations or stop loss or break-even timings. I minor change because I do so because simply the markets are not always the same. It may be very much different in the future. Last year, no charts, no markets will be the same. So, but if we monitor every day, then we can notice the changes in patterns, especially lower time frames. We can notice some changes in the patterns. Like, in some pairs, we have many double top or head and shoulders, but in some pairs, we see some P waves or engulfing breakouts many times. So the patterns are a bit different among the pairs. And but if you watch daily, every day, you can start to notice. And sometimes without knowing myself, without realizing myself, I change my strategy. So it's kind of difficult to express exactly how I change. But when I start to feel it's not the same as the previous, then I start to minor change my strategies. So in the 5-minute chart, I don't use Ichimoku, so I will just cancel Ichimoku Kinko here for now. And yeah, so this is how it looks like. So what do you think? Would you buy right now or would you hold? Let me take the stochastics and Bollinger Band today, because I use Bollinger Band and stochastics for additional confirmations. But as far as I see these tools, there is no entry confirmations. So simply I can delete these indicators and look at the price action only, or the lines, price action, to enter the markets. But and also I get these questions like, so why do you look for entry confirmations? Like whether you look for or not, the market goes towards your direction and then you make profit. If it goes backwards, then you exit. So why do you look for entry confirmations? I get these questions on the emails sometimes. So for those who have questions, let me just answer quickly. Is that I look for entry confirmations in multiple reasons. One is by looking for them, I can wait. I can wait maybe 3 minutes to 5 minutes to look for the entry confirmation. And that gives me room in between myself and the chart psychologically, and so that it stops me from jumping into the market. So that's one of the reasons, which is very important. Whenever you see the market spike up, you might want to enter, jump in, and suddenly the market will reverse. I think you may have that experience before, but just for the waiting purposes, I want to look for 3 confirmations. That's one. And also, by looking for 3 confirmations, I can see markets in the logical way. And if I think the market logically, then I will have less emotion. And that's another reason. Because emotion is very challenging for everybody, especially when it comes to trading. Emotion or sometimes like motivations or might be a bit challenging, because with or without emotions, the market just moves by itself. So technically, we don't need emotion to trade. We don't need motivation to trade. In that sense, like when it comes to like sports, when it comes to studying something or mastering something, then you might want to have some emotion or like motivations. But when it comes to looking for the opportunities and taking trades, we have to have less emotion and less motivation. We have to calm ourselves without any second rules. We have to take trades. So yeah, and that's the reason why I look for the confirmations, to think the markets logically. Yeah, and also there's a third reason. I just happened to come up in my mind on the third reason is to look for to be able to know where exactly to exit after entry. Let's say I take this may not be a good example, but let's say maybe here or maybe a bit further. Good example maybe here. So let's say I enter here. I enter at this place and I put the stop loss below the previous low in 5. So usually here, if it's not too tight, I take a buy, then that was 12 pips of 13 pips is too tight. I take the second previous low, which will be here. And the stop loss in this case will be 38 pips. Well, let's say I take 38 pips of stop loss and enter here. I get the confirmations like stochastic gold cross, band squeezing, and also the one more thing I have to wait for is this very small P wave break, let's say. Let's take a bit further. Okay, so here is a P wave resistance break. So let's say I enter here. When I enter here, then I think my stop loss will be below the previous low, which will be over here. And the stop loss pips in this trade will be, let's see, 31 pips. So let's say this was my initial entry. I got confirmations of band walking. This is called band walking. The market is placing in between deviation 1 and 2 is band walking, which is one of my confirmations for entry. And also stochastic gold cross is the second confirmation. And third confirmation is a P wave break. Let's say I take these three confirmations to enter the market. So I expect that the market goes towards my direction bullish. If it goes up, if it breaks resistance, so here's resistance. If it breaks resistance and it goes up in this way, at some point I move this stop loss above that position so that even if the market reverses backwards, I don't lose. This is called a break-even line. I set the break-even and simply leave chart for a couple of hours. After I set the break-even, I don't risk anything anymore, so I simply let it go, let it run the market. But so that will be the timing for the break-even. But coming back to the exit timing, in terms of exit, let's say the market reverse. Let's say the market will be resisted here and reverse backwards. Then my exit timing is also based on these entry confirmations. I exit logically. Let's say the market goes bearish and marks double top and neckline breakout in the 5-minute chart, and stochastics may be dead crossing by then. So when I see this double top neckline break in 5, then I would exit already before hitting the stop loss. So this is stop loss, 31 pips stop loss. But before hitting stop loss, I would exit because this is something that I told on the other live streams, was that the market tends to follow the higher time frame directions. So if it goes bullish, that means this lower time frame 5-minute chart is following the major direction. But when it comes to reverse, it starts from the lower time frames. So yes, I see uptrend in this particular entry, but it may reverse from here, which we never know. But if we see the potential reversal confirmations after entry, then you have to exit, is my idea. And that's why I would exit once I see these reverse confirmations in the 5-minute chart. In other words, if it's bullish, then 5-minute will never show reverse confirmation until I set the break even. And that's why I will exit, and I prefer to exit much earlier timing than the market hit the stop loss from this reason. And this is what I mean by keep the losses very small on every trade. So basically I trade enter in the 5-minute chart, but follow the daily or the 4-hour chart, 4-hour time frames is my strategy. And if you're new to my YouTube, you can also find all the explanations for free, the access to my webpage, and however, free download and KTS trading strategy please click on the link here, and you can find the web page, new page. You can have the free download PDF of my strategy, and also the introduction video of my strategy. So yeah, please always come to this web page to get the latest PDF and also the videos. But basically, that's how I think about the tradings. Okay, now I'm kind of very nervous of the sound, but it's okay. I will get used to it. Sorry, this is my first time in Dubai during the Ramadan, so yeah, I think there will be a big cannon sound anytime soon. But yeah, so here is come back to pound JPY 1 hour time frame. Once again, so we have left the chart maybe like how long? Like a couple of minutes. But this is still bullish in 1 hour because 1 hour candles hasn't been closed yet. It's not closed yet, so 1 hour is still bullish. And in the 5-minute chart, let me see if we can find some entry confirmation. So right now, the market is a bit bearish to me. So what I mean by bearish in this 5-minute chart is about the price actions. In price actions, you can easily simply divide from where to where is uptrend or from where to where is downtrend by looking at the waves. So, so here is the beginning of the uptrend in 5 minutes here, exactly on this bullish candle. This was the beginning of the uptrend because afterwards it was in a bullish in the wave like this up until this candlestick. And exactly here it retraced backwards and going down, went downwards to here. And from this candlestick at 11:45 a.m. it started to go up until here. And what we see here now is this is bearish in wave. So when you see this one single I wave, you might think that this is bullish. And yes, in a very short term, it's bullish for the last 30 minutes or so. But in 1 hour basis, it's still bearish. This downtrend may be continuous along this way, unless the market breaks higher, breaks the resistance in the 5. If the market breaks resistance in the 5, then this is normal N wave bearish, so it may turn to bullish. So I could wait until it to happen to look for entry chance. By then, stochastics may be gold crossing, and I may see some other confirmations to buy. So that's one of the things I would think this case. And also the other scenario would be, so this is bearish in wave right now, but before breaking the resistance in 5, it could be bullish. And that scenario would be we see bullish in the wave before the breakout of the resistance. So from here, it could pull back this way. So this is still reverse in the wave continuation. But at some point, it has a pushback and the market goes up in this direction and breaks resistance. When I see this, this is the way for the market to go up, and that will be, I think, yeah, that will be the confirmation to buy. But either way, I wait for the resistance break and wait for the next N wave or a bullish N wave. Otherwise, most likely I won't look for the buy chance in this case. But this is how strict I watch the lower time frame to look for an entry chance. So I don't usually trade whenever the market is trending. And this is the reason why I want to look for the confirmations, look for the trading edge to buy or sell. And I do this every day like this. Yep. So that's basically how I do. So yeah, so for the next 10 minutes or so, let me come back to some comments. Yeah, start some discussions right now. But once again, thank you for joining, everybody. Great to see you. Once again, I hope you have a great weekend. Oh, there you go. Okay, I will get used to it now. All right. So, okay, let's see. Pound JPY time frame for our chart, Senko span B will pointing downwards in 32 hours. Okay, Senko span A will continue to point up. It will become full bullish Kumo. Okay. You measured a number of candles and get this confirmation. Okay. So in 32 hours, so that will be tomorrow night, we can come back, or even Friday, we can come back on Pound JPY and start to look for the buy chance. Yeah. So this is in a 5-minute chart. Basically, I watch the price action, and Bollinger Band stochastics are kind of supportive indicators to me. But you can try. You can draw these lines to the future and see how it plays out. I used to do it like I forward the chart a bit like this, and since this is bearish wave, I created the lines. Whether the market breaks resistance and goes up, or the market goes up on the end wave from here, or it continued to be bearish. Continue to bearish I wave, break support, or some pullback and pushback, and go down this way. So there are multiple scenarios about this. But by drawing these lines, maybe you can leave chart for a couple of minutes and come back and see how it plays out. I think that will be also a good training for yourself in terms of price actions. So this is not a prediction. We can't predict the future, but we can create scenarios ahead so that you can psychologically prepare. When it really happens, when this bullish wave really happens, then you can get ready to buy. But if you didn't think about the up bullish scenario, then by the time you come back to the chart, you might have some struggles. So it's always nice to think ahead and create scenarios to the future, multiple scenarios to the future. Because it's all about psychology, after all, in tradings. When you can expect something to happen, then you can psychologically prepare. But when you cannot expect, when you can't expect something, then that will be a big surprise. And that surprise may be painful. A says, Kei, why do you split your trades into two parts? On your March performance video, you split your same trades in two parts. Any reasons of such action? You mean take two positions at the same time? And that's because I follow two different time frames after enter the market. I follow the higher time frame in daily or 4, and also follow 1 hour or 30-minute time frames. And when I did it, my performance got much better than taking one single position. And that's why I take two positions at the same time. Okay, John Harris says, what about dollar Swiss franc? Looks going to be bullish on the daily. Okay, let me check. Dollar Swiss franc is bullish on the daily. So here Dados is run, and let's see. Oh, this is not a bullish. This is technically not a bullish because Kumo is still flat. You can technically see that the Senko span AB both up, but there was a big hump on the Kumo previously. So yeah, this will be a bit range. It needs to break the previous Kumo, previous resistance of Senko span A to become a bullish trustable Kumo. But let's about how about 4-hour chart? 4-hour chart maybe. Not yet. Yeah, 4 hours still a bit. It has been bullish today, but Kumo flat, Kijun Sen flat, Tenkan Sen also flat. So it's still ranging as per Ichimoku. So I don't jump in this case. Ikhargao says, I just logged a long pound JPY, 40 pips, up loss, 201 pips target. Okay. Okay, yeah. Pound JPY is technically still not a uptrend in this 5-minute. So just be careful. When it reverses, you have to exit at some point. And also, never hold until FOMC. That will be happening at 6 p.m. today. So, yeah, you have to exit with a small loss, small profit, and come back afterwards, is my suggestion. Yeah, these fundamentals, I don't really go deeper in the fundamentals, whether it's hawkish or dovish, on these rate decisions in the US. I have been reading many articles about this, and I have my opinions, but technically I don't really trade by the fundamentals. So my rules are very simple. Whenever there's a big events, big news, then simply stay away, come back afterwards. Or at least set the break-even line, and then watch news. Is my advice, because we never know how the news can impact these multiple markets. Unless it releases, we never know. So before I was trying to trade by the news, but I gave up because it's very much unpredictable. In theory, when the turnout is positive than previous consensus, then this currency tends to be bought. When it's negative, that currency tends to be sold. That's in theory, but that's just simply a theory. And the market doesn't really move in theory, oftentimes. Okay. So let's see, let me check some other charts and comments now. Anli says, so when you are already in a trade, you will look at 5-minute time frame for exit point. Yeah, that's true. I take 5 minutes to exit. Yeah. JY says, can I get the Bollinger Band you are using? There are different types. I'm using a default Bollinger Bands. When you simply type Bollinger Bands, I think you can get the default one. Yeah, this one, Bollinger Bands. And I place 2 Bollinger Bands. You can see 2 BBs here. I have 2 Bollinger Bands and SMA 20. I put the SMA 20 and deviation 1 and 2. So I use double bands, the Bollinger Band. Okay, so let's see. Okay, Cross Ellen says, hello K, I'm new to your channel. Might you tell me why you are using 2 Bollinger Bands? Oh, so the reason why I use 2 Bollinger Bands is that first of all, I have been using 2 bands all the time. I never used one single band even before I was using 3 bands, deviation 1 and 2 and 3. But now I only use 2 bands. And that's because I can capture the exact band walking situation and squeeze of the Bollinger Bands. Visually, it's very effective. So squeeze can be captured when these 2 lines get closer. So this is a squeeze here. And band walking is here. Whenever the market moves, it tends to go between 1 and 2 like this. So here 2, this part is called the band walking. And I take also this as entry confirmation. That's why I use 2 bands. If I use only 1 band, then I cannot capture the band walk. I may be able to capture squeeze, but the band walk I cannot see visually. And that's why I use 2 bands. Yeah, I used to use 3 bands when I was using different strategy, but now I only use 2 bands. Okay, let's see. I see some suggestions now. Bitcoin and XAUUSD are right. Let me check these 2. BTCUSD first. I know there are many crypto traders here. Let me check the Bitcoin. Daily time frame. Oh, okay. Looks like it's breaking the previous resistances. My scenario was the market supported by the previous resistances and the previous support and goes up. But right now it's breaking bearish. But here we have to hold because it takes another 9 hours for this daily candle to close. So we never know. After 9 hours, it may close above the resistance. And if the market sees that tomorrow, then there might be buyers and the market might go up. Right now, it's downtrending. It's a bit breaking the previous resistance. But this is when we have to be patient for this candle close. But overall, it's bullish in my view. Kumo is bullish. Kijun Sen is also flat, but market above Tenkan-sen, Chikou span above candles. So in between the, from long to mid-term, it's bullish. And also XAUUSD. Gold is ranging and there's no movement. I screened the chart one time today, but there was not much of move. Here's a daily chart. You see the market has been ranging since the 16th or 17th, 15th of March. So no trends and no trace. But I can still see that this is potentially bullish because there are 2 supports and also Chikou span is touching. But I think Chikou span will be the key for the gold in this situation. Because what might happen is, Chikou span, when Chikou span breaks, gets out of the candles bearish, then that will be the beginning of the downtrend because that will also be a Kumo breakout. But there is another strategy which is called the Chikou span trace, the previous candles. When Chikou span started to trace the previous candles, then that will be bullish. So right now on gold also, it's time to hold whether the market is wanting to go up or down. And at this moment, we never know which way it will go. So we have to stay away from this one. Okay, and the next one is Joseph. Can you review Euro Swiss franc? Right, Euro Swiss franc daily is bearish, but okay, Chikou span touching, so this is range in definition. Let me check 4-hour chart. 4-hour chart shows, yeah, the Kumo down, Kijun Sen down. So from here, it may start to go down. Yeah, so we can also draw the trend line. The market may be rejected by the trend line or the Kijun Sen, and may continue to go down is my... That's EURUSD run. Okay, Tamas, you're welcome. You're welcome here. Augustine says, Kei-san, is there a teaching video on how to calculate the time cycle on when the candles will go up and down scenarios? Yes, there are many time cycles, live streams and videos on my YouTube channel. So you can simply search, in the search box, you can just mention time cycles in Forexkei, and you can find many videos. Yeah, so let me start to cover some other comments related to Forex trading for this. Sisha says, drawing lines is good thought. Thanks, Master K. Oh, you're welcome. You're welcome here. AlexFX says, splitting trades and taking 2 different time frames has been amazing for me as well, all due to K. Oh, that's great to hear. Great to hear that it works for you. Yeah, it makes things a lot easier when you take 2 trades, 2 positions at the same time. Arnold, no, I don't. I don't have any scenario for FOMC. Simply, I stay away. Okay, so it's been about 1 hour now. So I guess I have to go. So I will end the live. I'm sorry I wasn't able to cover all the comments and questions. But after I finish this live and after I finish this next call, I will come back to this live stream and enjoy your comments. So, yeah, thank you so much for your participation as always. Otherwise, I won't be able to do these live streams every day almost. So, yeah, thank you so much. So, last small talk is, yeah, FOMC is today. Before, I never cared about what kind of news that there will be in the markets because, you know, I can still make profits by the news, I thought. And after a couple of trials and errors, I found that news are just news. And sometimes news can break the Kumo, break all the technical confirmations, and sometimes news can change the whole direction of the market. So after I observed these situations many times in the past with some painful experience, I decided not to trade by the news anymore. So yeah, whether it impacts market or not, whether it's or not, we can always stay away, come back because markets are always moving every day for you. So that's also related to FOMO. Yeah, like I was speaking with other GTS members the other day. Every time we see charts, the markets are not moving, but every time it's away, the charts are moving. So markets are watching ourselves. That was the psychology. But I think same is true. Let's say when you're looking for post office, when you're looking for Starbucks, when you're looking for taxi, it's not there. But when you're not looking for it, it's always there. So that means it's all about psychology. So yeah, I think FOMO is one of the biggest challenge for everyone. Yes. But yeah, anyways, thank you for watching until the end again. So if you liked it, press the like button. And yeah, I hope you have a great day. And I will see you tomorrow on the live stream again. So until I see you next time, please stay healthy and stay safe and stay gold. Alright, bye for now. Mata ne, everyone. Thank you.